Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of February 10th through February 14th. We're in part one of our weekly trading game plan for this trading week. We'll try to help you learn how to make money trading this February. So let's get started. Welcome, Fairchild. Thank you for joining us. Hope you had a great trading week and are doing well. So here's our notes for part one of our weekly trading game plan for February 10th through February 14th. We keep our notes for our weekly trading game plans in publicly accessible Google documents. Our notes documents contain links to bonus videos, to the tools and resources we use to do our market analysis, come up with our trading strategies, our trading ideas for this trading week. And you can find a direct link to this Google document in the description box below. We keep all of our Google documents with our weekly trading game plan notes in a publicly accessible Google Drive folder, so you can refer back to the notes for this week as well as previous weekly trading game plan notes. And you can also find a direct link to that publicly accessible Google Drive folder in the description box below. Welcome, Gerald Fitz, Ricky Kahn. Thank you all for joining us. Hope you had a great trading week and are doing well. So firstly, we'll very quickly look at how the markets performed on Friday. Then we'll do a breakdown of the major indices and the technology sectors. So we see all the major indices, pretty significant decline on Friday. So the Dow down almost 1%, NASDAQ down 1.36%, S&P down almost 1%, had 75% declining, only 22% advancing. Got 60% new highs, 40% new lows. We've got about a 50-50 split or so above and below their 50-day moving average. We still got 56% above their 200-day moving average, 44% below. You can see generally pretty bearish. It did start out positive, all the indices, and then pretty steep decline. We'll talk about the potential cause for that decline on Fridays. Michigan consumer sentiment seemed to trigger a negative reaction, and we'll talk about that data. We see most of the Mag 7s were significantly red, with the exception of NVIDIA. NVIDIA bounced back up a little bit, Lilly a little bit, bounced back, Meta positive. So most of the other sectors pretty red. Energy a little bit of a bounce back. Look at the news. Trump team tries to persuade Wall Street Doge is good for markets. We'll see. King dollar emerges as fresh threat for big tech earnings. Inflation data to test market as tariff talk swirls. We'll see if we have time to talk in detail about tariffs. NASDAQ Dow fall amid tariff fears, mixed job report. We'll talk about the jobs report as well. Reciprocal tariffs coming this week again. So more discussion on tariffs, more volatility in that area. Dow closes 400 points lower as inflation and tariff fears spur a sell-off. So we see oil did rebound slightly back off of 70, back up to 71. So we've got support at 70, resistance in the low 70s to 75. Natural gas been pretty volatile, bounced off of about 330, bouncing back up. Again, the long-term trend generally up. Gold made a new all-time high, breached 2,900 per ounce, then retraced slightly. So now it's testing that resistance level major milestone at 2,900. And we can see all the major indices pointing significantly down at this time. Bitcoin now back below 100,000. Looks like it's got support about 95K or so, but again, now heavy resistance at 100K. We see all the bond yields bounce back up on Friday. They were retracing earlier, so bond yields back up. 30-year almost to 4.7. 10-year just below that critical 4.5%. 5-year at 4.33, so bond prices retraced a little bit. Bond yields rebounded back up. Welcome to Crow. Thank you for joining us. Hope you had a great trading week. So if we look at a breakdown of the major indices and the technology components, and again, you can find these screeners in our notes documents as well as in the screeners tabs of our ETFs and watch list Google Sheets. So we'll look at the major indices. See, again, the Dow didn't quite test its previous high, rolled over. It's got pretty good support from the 50-day, so I would expect it to come down a little bit and touch that 50-day, get pretty good support there. IWM, again, heavy resistance from its 50-day moving average. Got downside support from that lower trend line, but again, heavy resistance on IWM, very sensitive to bond yields, interest rates, etc. I don't see it going anywhere. We could see a significant breakdown in the Russell at some point, but again, heavy resistance. You can see the 50 days rolling over. In technology, NASDAQ just kind of chopping up and down in this narrowy channel. It's got good resist or good support from the 50-day moving average, resistance from this upper trend line. Again, just oscillating between those trend lines right around that 50-day moving average. Again, I expect further oscillation right around that 50-day moving average. S&P's got support from its 50-day moving average. So it's bouncing up off that, making lower highs, lower lows. So again, further oscillations with a broadening lower highs. So potential downside risk there. Got support from that lower trend line, but again, it's just oscillating, bouncing off that 50-day moving average. We look at the breakdown of the technology components. It's interesting, even though like the IWM and some of the other high inflated price growth stocks aren't doing very well. ARK had recently made a new 52-week high, broken out of that upper trend line. It's getting some support there. So ARK-K's been strong. Once that breaks down, potential downside down to its 50-day moving average. So again, the inverse of ARK-K is SARK. We'll be talking about that, and we've been watching that for a little bit. The FANG stocks, again, most of the Magnificent Seven have reported now, with the exception of NVIDIA. Several of the Mag 7 cloud providers, Microsoft, Amazon, Google, all kind of disappointed on their cloud growth. So we did see some retracement back down. It's got good support. The buy the dippers are still pretty relentless in the Mag 7 stocks, so I expect just a further chop in the FANG stocks, Mag 7, until we get NVIDIA's report late in February. Semiconductors haven't really been going anywhere. Got support on the SOXL around 25, upward resistance from the 50-day moving average. So a very tight range, pretty flat in semiconductors. See, biotechs went up, tested that 50-day moving average, strong rejection. Again, they're going to be sensitive to bond yields. So I expect further downside in biotechs back down to that lower trend line. See the trend definitely down, lower lows, lower highs. So again, I expect significant downside in biotechs. Broad technologies, the TECL is getting pretty good support from that 80 level. It seems to hold pretty well. It bounces up, tests its 50-day moving average, rejects off of that. So I expect, again, further bounces back down to that 80 level. If that breaks, then again, we have significant downside in broad technology. Again, TQQs, just leverage long on the NASDAQ, which we discussed. Welcome, Katon. Hope you had a great trading week and are doing well. Okay, let me grab a quick drink and we'll go over the groups, the sectors, the industries. Okay, if we look at a breakdown of the groups, sectors, and the industries from last week, we see Friday, everything negative, the least negative energy, utilities, and real estate. For the week, we see the weakest was consumer cyclical, possibly some Amazon, some cosmetics, etc., tariff related negativity. For the week, positive consumer defensive, basic materials, real estate got a bump from the retracement of bond yields. Technology was positive, energy positive. Again, negative, the most negative consumer cyclicals, communication services, again, some of your cloud providers. For the month so far, the strongest are basic materials, financials, and defensive. So in general, so far, a pretty defensive bent to the month. Look at the industries. Uranium, strong rebound. Copper, a lot of your commodities had a pretty good rebound. Copper rebounded quite a bit. Farm products rebounded. Not a lot of positive from Friday. Most REITs negative. Gold slightly negative. Oil negative. Transports negative. Railroads, trucking, etc. Solar pretty negative. Getting rebound in rates. Silver retraced. We'll see it bounced off, I think, the 33 level, retracing back down to 32. Steel pretty negative. Footwear and accessories, thermal coal. So for the week, again, copper, gold, very strong. Tobacco. Some REITs positive for the week. Uranium positive for the week. Steel positive for the week. Silver just slightly negative. Oil a little negative. Solar slightly negative. Again, transports negative. Rails. Again, oil, thermal coal, and some retail. Auto manufacturers strongly negative. Again, Ford reported disappointing earnings, and we'll talk about the impact of tariffs on automakers as well. Gold very strong for the month, again making new all-time highs. So we'll talk about the economic data that we got this week, and then also the upcoming economic data for next week. Just a quick reminder, as the important economic data comes out, important economic news, I try to capture it and post it as quickly as possible in the Surf the Markets channel in our Discord. Our Discord's free to join. We'd love to have you join in our Discord. Great source for real-time economic data, real-time economic news. Also, you can participate in 24/7 discussions with your fellow BeachBum traders and any topics related to trading, etc. So you can see as the important economic data comes out, important economic news, try to capture that from investing.com, screenshot, raw data, etc. Post that in the Surf the Markets channel in our Discord. Again, we have channels in our Discord to discuss all kinds of trading, different asset classes, different trading styles. And again, you can participate in our Discord with your fellow traders 24/7. We'd love to have you and have you actively participate in our Discord. Again, you can find a link to our free invite to our Discord in the notes, documents, and the description box below. So the economic data from last week, not a whole lot Monday through Wednesday. Thursday, we got weekly jobless claims data and job cuts. So job cuts slightly higher than previous. Initial jobless claims higher than expected, so a little deterioration in the job market. Continuing jobless claims higher than expected and higher than previous. So again, we're starting to see some erosion of the job market. Non-farm productivity less than expected. Unit labor costs a little less than expected. So again, we're starting to see some slight erosion in the job market from a weekly jobless claims data standpoint. And Friday, we got non-farm payrolls first. And the non-farm payrolls was weaker than expected, so fewer new jobs being created. Also, government payrolls less than previous. And again, we've got the Doge and Trump administration. They're pretty much looking for people to leave government payrolls and putting a hold on hiring. So expect those government payroll numbers to be weak going forward. That's going to also negatively impact the overall job creation rate. See, participation rate went up a little bit. Hourly earnings went up, so slight inflationary effect on earnings. Private non-farm payrolls weaker than expected. So again, the private sector also creating jobs, less jobs than expected. So again, more signs of some erosion in the job market. U6 unemployment rate was steady, but the general unemployment rate did tick down a little bit. So we do have some resilience, but again, fewer jobs being created, more initial jobless claims. So again, starting to see some erosion in the job market. Then we got the Michigan sentiment data at 10, and we saw that roll over in the markets when this data came out. I think the main factor with that negative reaction was the one-year inflation expectation rate went from 3.3 to 4.3. So the consumers are expecting significantly more inflation this year. Their 5 years still went up slightly at 3.3, and their expectations, sentiment, current conditions all eroded down below 70. So the consumers feeling less positive, more negative about the economy, seeing high inflation. In my humble opinion, a lot of this is related to tariffs. So let's look at the rest of the economic data from last week, and then we'll look at the economic data for next week. Just a quick reminder, this Friday is Valentine's Day, so don't forget your Valentine on Friday. Okay, so let's look at the rest of the economic data from this week. Got an OPEC meeting. They decided not to change, so they're not increasing their production. Got some construction spending up a little bit, manufacturing up a little bit, bond yields up a little bit. Got Fed officials talking, so we'll hear their feedback on tariffs, how inflationary tariffs are going to be, job cuts, immigration policy, etc. Factory orders down. Here's the JOLTS job JOLTS job opening. So fewer, so a tightening job market. So again, fewer jobs being created. Crude oil stocks up more than expected. So again, we did see oil prices dip down towards 70. We'll see if it breaks down below 70. Mortgage rates did dip below 7%, so that's positive for housing. ADP non-farm payrolls was better than expected, but again, then we've got the actual non-farm payroll data, and it was weaker than expected. Non-manufacturing, above 50, so still an expansion. Crude oil inventories up more than expected, so again, downward pressure on oil prices. More Fed officials, we talked about initial jobless claims and job cuts. Natural gas storage down more than expected. Again, natural gas been very volatile, but the trend is generally upward. Talked about non-farm payrolls and Michigan sentiment. Baker Hughes, so the oil rig count up slightly, total rig count up slightly, so more supply. See what economic data we've got coming up for next week. Michigan inflation expectations. We'll see if that's in line with the Michigan consumer sentiment. They're expecting 3%. crude oil stocks, mortgage rates on Wednesday. Then we get CPI data. So Wednesday, more important input into the inflation. So Wednesday, if this inflation core CPI comes out higher than expected, market could have a very negative reaction. Comes out lighter than expected, market could rally. On Thursday, we get PPI data, so supplier inflation data, similarly, but less important is the producer inflation. But again, if that shows that inflation is higher than expected, could get a negative reaction out of the markets. Initial weekly jobless data. So we'll see if we get further deterioration in the job market. Friday, get retail sales for January. So if we see if we get a deterioration in consumer spending, retail sales could be negative for retailers. Still got earnings, although again, the majority of the Mag 7, with the exception of NVIDIA, I believe, have all reported. I would highly recommend you keep an eye on the earnings calendar. We've got some important restaurants, fast food, see if they're being impacted, potential impacts of tariffs, etc. So banks, etc. Semiconductors. So again, go through the list and see how that might impact your trading, your current positions, etc. Again, we've seen companies get punished not only for missing earnings, but for poor guidance going forward, slower growth from your high growth companies. So again, earnings and guidance very important in this market. So again, you can go through the whole list in investing.com and see a shorter near-term list in Webull, and I'll show you that in a minute as well. You can hear how we trade around earnings. We have the link to the video in our notes. Again, we don't have another interest rate decision by the FOMC until mid-March, March 18, 19. So in the meantime, the market will be anticipating the probability of a rate cut or hold. We've looked at it. We expect a hold, no change in March, but we'll also get a new dot plot, a new economic projection in March. Okay, let me grab a drink and we'll go through the market screen in Webull very quickly. Just a quick reminder, if you're not already using Webull, you can still get 20 free fractional shares of stock by opening and funding your account with only $500. Each fractional share worth $3,000 to $3,000. If you'd use our affiliate link in the description box below, get your free fractional shares of stock, any additional promotions they're offering at the time, and also help support our BeachBum trading community, which we greatly appreciate. Using the market screen in the online browser version of Webull. You can see on Friday we had many more decliners than advancers, so more than 2 to 1 decliners to advancers. The percentage of decline was generally small, although a little more significant and much more weight on the decline side. See in the fear gauge, we're still in fear. We've been in fear for the past month. Although again, the market does, particularly the Mag 7, the buy the dippers and indices will rebound, but we've got a lot of fear under the covers. We'll also see the VIX really hasn't held its pops and still is relatively low. See the fear gauge isn't quite as low as it was mid-January. So mid-January we had a lower low 20 rating, but it is on the decline. So more fear coming in. And we see strong outflow out of the NASDAQ on Friday, so very negative and definitely increasing after we got that Michigan sentiment data to get positive inflow into the NYSE up till market on close, and then just turned down, but again, generally positive in the NYSE. Again, you can see the near-term earnings calendar and the calendar widget in Webull. So you can flip the calendar to next week, and you can go day by day, see who's coming up with earnings or expectation on each day, etc. So again, a great resource to see very near-term earnings in the market screen in Webull. We'll look at the best performing industries for the week. So the best performing industries for the week looks like business education, semiconductors slightly positive, but actually mostly negative. Metals and mining positive, gold very positive, uranium positive, LEU, or I think reported very positive earnings. Retail mostly positive, pets, pet med, coffee, pharmaceuticals mostly positive, Aurora cannabis. So we'll take a look at the cannabis, got a pop off ACB. REITs generally positive, construction slightly positive, banking, finance mostly positive, oil and gas pretty split, transport split. Look at the ETFs, best performing ETFs. So right now down on the Qs, down on mid caps, down on small caps, down on the Russell, so down on the Dow. So pretty negative right now from Friday. So down on the S&P, down on the NASDAQ, up on the VIX. So we did get a pop in the VIX on that Michigan consumer sentiment data. But it didn't really hold, dropped down below 15 and then bounced up a little bit, as we'll see. Down on the Russell, down on small caps. Industries, uranium positive, industrials pretty negative, airlines, jets negative, healthcare very negative, communication services some positivity, energy some positive, basic materials, again, copper and uranium positive. Consumer defensives slightly positive. Commodities, copper. Emerging markets, high yield emerging markets. So we'll talk about other emerging markets. Okay, just a quick reminder, you can also trade overnight, 24 hours a day, 5 days a week on Webull. I also heard that the CBOE is looking at doing 24-hour trading. So I think 24-hour trading is coming. So you can get into that now in Webull, find out more about overnight 24-hour trading on Webull. Get a link to the video in our notes and also the topic discussion topic in our Discord via the link in our notes. You can also trade futures in Webull. There's several we'll see. There's opportunities trading futures, not as accessible, particularly shorts and using ETFs. So if you want to take advantage of some of those opportunities, you can trade futures in Webull and get more information on trading futures in Webull via the discussion topic in our Discord via the link in our notes. If we look at the futures and FinViz, so again, we see the major indices, rolled over, Dow headed down, good support at 4,400. Again, probably going to roll down to get that support. It looks like pretty good support in the Dow. Again, S&P making lower highs, lower lows, got, significant downside to test that previous low, pre-inauguration low. NASDAQ oscillating more laterally, so it's bouncing off of 23.5 or so, resistance at 2,200, again oscillating laterally, tightening, highs and lows. Russell didn't quite make that 2350, got resistance from the previous high rolling over, and a lot of potential downside in the Russell, back down to that 2200 level. Nikkei peaked out and trending back down, probably bounced back off of that previous support level. Euro stocks and the DAX been very strong, trending upward. So when you see that roll over, I know we have a short for the Euro stocks, not one for the DAX. So if you see that, you could take advantage of that with an ETF we have in our ETFs Google sheet. Again, oil downtrending, peaked over 80, strong downtrend, support at 70. If it breaks that 70, we'll look to test that previous low. When oil bottoms, again, we'll be looking to take a long position using USOI, monthly dividend payer on oil. Natural gas had a futures rollover, trended down to 3, bounced back up. So was a strong uptrend. I would expect it to start trending back up, but again, very volatile. Gold, again, very strong. Briefly broke 2,900. Retraced slightly, but now it's testing that 2,900 level. Probably consolidate there for a little while until it breaks up again. Might get a retracement back down. See when it tests those levels, we get a slight retracement and then a strong breakthrough. Again, silver rejected just above 33. So these full dollar levels, resistance points, although it will break a little bit above that. Rejected back down, probably get support at 32, and then probably bounce back up again. Again, we have ETFs. You can long and short silver, gold. We'll find those in our ETFs Google sheet. Strong rebound in copper, so definitely headed back up. Strong breakout. Don't really have a short on copper. Platinum and palladium kind of peaked out, rolled over. A lot of the ags rolled over, cattle rolled over, corn pretty high. Wheat had a very strong breakout, so congratulations to any of our BeachBum traders who caught this uptrend in wheat using the WEAT ETF. Again, some of these we don't have short ETFs, so opportunities if you're trading futures, possibly the rollover in corn, rebound in orange juice. So sugar bounce back up. Lumber on the tariff talk with Canada. So it spiked way up, and then when the tariffs were off again, retraced back down, now headed back up again, on again, off again, tariffs with Canada. Coffee very high. Again, bonds were trending back up, and then we got that Michigan consumer sentiment data, slightly weaker non-farm payrolls, and bond yields pop back up, bond prices back down. So we'll see if the trend continues down before we get a swing back up. Dollar tested almost 110, retraced pretty quickly, and now it's again bouncing back up on those consumer high inflation, negative consumer sentiment data, and also inflationary factors of tariffs. The yen did finally head up, so we didn't get it right after that BOJ interest rate hike, but now yen trending back up, probably test the previous high. So congratulations to any of our BeachBum traders who caught that trend in the yen using either YCL or FXI. possibly some other opportunities. Saw that big drop on the Canadian dollar when tariffs were imposed on Canada, and then a strong rebound. So again, possibly some Forex opportunities with these on-again, off-again tariffs if you're a Forex trader. And we do have some ETFs in our ETFs Google Sheet that you can trade some Forex, and you can find those again in our ETFs Google Sheet. Yeah, Crow, we've got some lumber, again, long lumber ETFs, wood and cut we've talked about. You can find those in our ETFs Google Sheet as well. So I'm going to come back to our ETFs Google Sheet. I apologize. Hope you bear with me today. Probably jump around a bit. Got a lot of topics to discuss. So firstly, I want to get to our theme for the week, how to make money trading this February. So firstly, we'll quickly look at our graph for how February typically performs. So here's our graph for average returns on a monthly basis. Zoom it up, see if I can zoom it up a little bit. So here we have February. So we've got the blue is 2000 to 2024. The pinkish is 1928 to 2024. So we see February tends to be negative. So in the past 24 years, it's been negative almost 0.5%. Since essentially market inception, it's been just slightly negative, negative 0.09. So again, February tends to be a negative month. January, long term, tends to be positive. Past 24, slightly negative. We saw in our January barometer that this January was positive, and so the January barometer predicts that the year will be positive. We'll see if that pans out. But again, February tends to be a negative year or negative month. And then we get a rebound in March. So March tends to be positive. So again, protect your profits, protect your positions. We expect negativity in general in February. So again, we would expect more downside in the indices, more downside in the markets through February, and then have your shopping list ready, be able to take advantage of a potential rebound March, April. Also, I found this article that I thought was useful, also in investing.com, titled Stocks to Watch in February. So you can access the link to that article also in our notes. Again, you can read this whole article via the link in the notes, but some of the stocks to watch for February: NVIDIA. And I believe they report their earnings, I think, around the 25th or so. So that's going to be the next major potential catalyst for AI stocks, the Mag 7 tech stocks. Palantir already reported, very positive, strong upward trend in Palantir, again positive for AI stocks. AppLovin, again lesser known. I think they lose money. Russell 1000. So Allstate. So this is what the oil companies, Exxon, Chevron. We already heard OPEC's not going to increase production. And we've also got all the discussion on tariffs and how that might impact oil, etc. So again, let me know what you think of this article, what other stocks you think are good to watch in February. Let me know what you think of all of that. Please put that in the comments to our videos and our Discord, etc. Also got a previous discussion on how to make money trading in February. I believe that includes a number of other trade ideas related to Valentine's Day. So we've also got your matching type stocks, also gifts, etc. So for your Valentine, so additional ways to make money trading in February, focused on Valentine's Day. And we talked about how the markets typically perform in February, and also you can hear about the best performing sectors and industries in February via the link to those short videos in the notes. Also, discussions on how to make money trading in the winter, performance of the markets, and best performing sectors and industries in the winter via the link to those videos in our notes. Now I'm going to jump forward to talk about the ETFs, some new ETFs that we found, and then we'll see if we have time to look at some other ETFs. Crow mentioned, lumber, etc. Also, if we have time today or maybe tomorrow or next week, I've started a discussion or continuing our discussion on tariffs. So I put a lot of information in our notes document on let's talk tariffs, possible positive and negative implications of the tariffs. And so I'll come back to this if we have time. If not, again, maybe we'll have time tomorrow or next week. But again, you can access all of those videos and discussion topics in our notes if we run out of time today. So let me jump up to ETFs. Let me grab a drink and we'll go over some of the new ETFs in our ETF Google Sheet and see if we have time to look at some others. Okay, again, once we come up with our trading strategy, do our market analysis, come up with some trade ideas for our trading week, then we jump over to our ETFs Google Sheet. We can find ETFs so we can trade those trade ideas, be it long or short, indices, commodities, single stocks, etc. And you can do likewise, gain 24/7 access to our ETFs Google Sheet by joining our Patreon. So I've got some additions, some new ETFs we've added to our ETFs Google Sheet that I wanted to go over today. So the first one is a pair of leveraged ETFs on the AI and big data theme by direction. So these are 2x leveraged short bear and leveraged long bull ETFs on the AI theme. So we'll look at those first. They're in the main sheet of our ETFs Google Sheet. So you can see near the top, here's our AI artificial intelligence category. So you can see here's AIBD, the 2x short, AIBU, the 2x long. So we'll look at the long first and look at its constituents, but this is the only short that we have. So if you think that the AI theme has peaked out and it's a good time to short the AI theme, that short's pretty close to its 52-week low. See, it's got a pretty good risk-reward profile. As we'll see, these are relatively new, so we don't have a long history. So the 52-week is pretty much the bottom and tops. So firstly, we'll look at them in FinViz. So a quick reminder, you can find the link to FinViz and the other tools and resources we frequently use on our homepage, beachbumtrading.com, bum without the U. So if we open up, I guess I had FinViz up. So we'll look at AIBU first. So again, daily AI and big data, bull 2x, so 2x leverage long. So you can see that's been in a pretty strong uptrend since August. So again, still pretty much in a pretty strong uptrend. Looks like it, peaked out recently. Again, we did get some negative cloud growth from Microsoft, Amazon, Google. See, this is the long AIBU is optionable, relatively new, pretty small. Again, it's only been out since last May or so. So only 13 million AUM. Volume's pretty light. So again, expect, large bid to ask, light volume, pretty choppy. So you see how choppy it's been. Expense ratio, less than 1%. This one does pay a small dividend. We look at its composition. So it's got a big data index swap, the top holdings, Meta, Amazon, Apple, Alphabet, Microsoft, NVIDIA. So NVIDIA is a little bit lower in the list. Meta's pretty high, so Meta's been up, so holding it up. Little negativity from Amazon. Apple did rebound a little bit. Google's trending down right now. Microsoft also peaked out, slower cloud growth. So if you think this AI theme is peaked out and is rolling over, then you might want to look at the AIBD. See funds inflow. It's had positive fund inflow for a while. 200% of the daily performance of their AI and big data index. So again, if you think the AI theme is going to continue upward, AIBU. If you think it's peaked out, then we can look at AIBD. So AIBD is the short. So it's going to be the inverse of AIBU. So again, same composition, just on the short side. So it's been downtrending. Did get a little bit of a rebound recently, probably on the slower cloud growth of some of those major companies. Does pay a small dividend, so almost 4%, so not a bad dividend. This one is not optionable, so you can't sell covered calls on the short side. Could sell covered calls on the long side. Again, AUM very small, less than 2 million. Volume very light, less than 4K. So again, expect it to be very choppy. We'll see if this gains some traction, becomes attractive. Again, this is the only ETF I know of offhand that allows you to short the AI big data theme. So again, when that peaks, or again, if NVIDIA, other AI companies disappoint, you might want to jump on this AIBD, short the AI theme, get positive on NVIDIA, etc. Long the AI theme. See AIBU, the risk reward profile is 1.8. We've got some others, so it's got a better risk reward profile than some of the others that we've had in our sheet. Bots, robot, ubot. This AIBU has a better risk reward profile than those, so you can compare those to the previous ETFs that we've had in our ETF Google sheet for trading AI and big data. So let me know what you think of this AIBU and AIBD pair for trading artificial intelligence and big data. If anyone's used those to long or short this theme, love to hear your feedback on how they trade. Is the low AUM, low volume an issue? Again, let us know what you think of AIBU and AIBD to trade the AI theme. Second pair I heard about from Direction. They did a video, I think, on ETF Guide and on their Direction ETFs, new Direction ETFs was to trade Berkshire Hathaway, Berkshire B, long and short. So the long is a 2x long on Berkshire. The short is a 1x short on Berkshire, so Berkshire B is a relatively expensive stock. And again, unless you can short, there wasn't a way to short Berkshire. So I've put those in our research sheet. So now in our research sheet, you can find a category on Berk B, Berkshire Hathaway. So if you want to use an ETF to long or short Berkshire B, you can use BRKU to long, BRKD to short. Get a way you can short Berkshire in a retirement account. See, the risk reward on the short's pretty good. Not a whole lot of risk reward in either the long or the short on a 52-week basis. Again, these are very new, so we'll take a look at the long. So here's the 2x long. Again, only been out since December, so not a lot of history. Another reason I put it in the research sheet for now, although it's not optionable. Again, very light AUM, less than 10 million, only 36K volume. Doesn't look like it pays a dividend, less than 1% expense. The longs perform positive 7% for the year. You see it's holding a number of daily Berkshire B bulls. If we look, I just want to look at the Berkshire B price. So again, Berk B, about a $500 stock. So if you're looking for a more economical way to trade Berkshire B, long or short, and you can use the Berkshire BRKU, BRKD ETFs. So let me know if any of you have used these new ETFs from Direction to trade Berkshire. Look at Berkshire D, the short, again, very light volume, very choppy. So again, very new. There's less than 2 million AUM, under 1K volume, very light volume, not optionable. Again, under 1% expense ratio, but again, a way to short Berkshire if you think Berkshire's peaked out and rolling over. Again, on a daily basis, trade Berkshire using these ETFs for, $25 or whatever versus $500. So again, let me know what you think of these ETFs from Direction to long or short Berkshire in the comments to this video or in our Discord. Last one I want to talk about that we've added to our ETS Google Sheet is one on South Africa. So this is a long on South Africa. This was mentioned, I believe, in a Benzinga video. It's a possible opportunity with high gold prices. So put EZA. This is the iShares MSCI South Africa ETF. So we didn't have any previously in our ETS Google Sheet for South Africa. So now if you search EZA, so here's the ETF on South Africa. See, right now it's at 45, kind of in the middle of its range. It's got a 52-week risk reward of about 1.4, so not super great. Current risk reward, a little more risk, so it's kind of in the middle of its range again. Let's look at what it's composed of. See, right now it's been kind of oscillating. Looks like it does pay a dividend. It's like possibly a biannual dividend, $2.62. This is optionable, so you could write covered calls. It is shortable, so you could short the ETF to short South Africa. Decent AUM, 346 million. Volume, not too bad, 167K, so a little bit more popular. See, it peaked out around October, bounced back down, trending back up, again, probably on gold prices. So if we look at the composition, again, gold fields, a bank, Anglo Gold, popular South African gold. So again, heavy in gold. So if you think gold prices continue up, might be an opportunity to trade that using the South African ETF. Look longer term. It's been around for quite a while, since pre-2013. A lot of oscillation. It looks like it oscillates quite a bit. So bottom to top, pretty nice risk reward. Even from this 50 level, the previous high, it's up in the 70s. So, pretty good bottom to top risk reward for this South African ETF, EZA. So, again, if you think that'll continue to trend back up towards its top, decent, again, possible reward back up to that top. So now we've got one we can trade for South Africa, trade trends in South Africa using the EZA ETF. So let me know what you think of that ETF to trade South Africa. I couldn't find a short version, so that's the only one I could find to trade South Africa. But again, that ETF is shortable if you can short in your account. So again, let me know what you think of that trade idea. Okay. Okay, just I think I'm going to defer the tariff discussion to either tomorrow or next week. So we can quickly look at any other ETFs that you all want to look at. Let me grab a drink and check the chat, see what other themes, ETFs, etc. that you all want to take a quick look at. Okay, again, I'll try to keep an eye on the chat. I know Crow had mentioned lumber, so that's one of the tariff discussions. We've got a couple on lumber, so wood in our main sheet, and you can see it's kind of still in the middle of its range, possibly get some volatility with lumber. Trade that with wood, or also you can find lumber in our research sheet. I thought I had cut in here. Let's see where cut is. Timber. So cut is under timber because that's the global timber ETF. Again, both of these are long. So if I bring up cut in FinViz, so both of these are long. Cut is long on timber. Wood is long on lumber. So again, if you think timber and lumber prices are going to spike up again on these on again, off again tariffs with Canada, again, you trade timber with cut or lumber with wood. And we'll talk in more detail about tariffs specifically on various countries, commodities, etc. Again, I've got a whole bunch of links I've compiled and videos we've done before on various topics related to tariffs. So again, can access that. Also, I asked ChatGPT about the biggest imports to the US from Canada and Mexico. So you can see those answers from ChatGPT using the link in our notes. And again, we'll talk about all of this in more detail when we get the opportunity. See a number of people are talking about NVIDIA and various ETFs, single stock ETFs to trade NVIDIA. So you can also find a variety of single stock ETFs in our ETFs Google sheet. So we've got some in the main sheet, a long and short. Also, you can find some additional ones in the research sheet. So again, you can pick the one. I think someone was mentioning NVDQ. The Crow was mentioning NVDQ. Short video with any NVDQ or NVDS. So again, you can pick the one with the risk reward profile, the amount of leverage, etc., that you prefer. And again, you could find a variety of single stock ETFs also in our ETFs Google sheet. Again, various commodities, gold, oil, silver. Silver's been pretty volatile. I expect further volatility in silver, so you can find the long and short ETFs, leverage long and short on silver, AGQ long, ZSL short. Also part of the tariffs. We'll then, again, tomorrow we'll talk about BDRY, dry bulk shipping, possible impact of Trump's trade war on global shipping. Okay, again, if you'd like us to do research on any further ETFs, or if you have any questions regarding ETFs we have available, please put those in the comments to this video or any of our other videos or in our Discord. Again, you can tag us in our Discord. We're at BeachBum Trading, all lowercase, no other characters, symbols, etc. Anyone else is imposter, please ignore and report them. So again, if you have any other ETFs you want us to take a look at, any questions about how you can use these ETFs for trading, please let us know. Also, we'd love to hear your feedback on what we can do to improve our weekly trading game plans or any of our other videos or tools, etc. So please put those in the comments to the video or in our Discord. Let us know what we can do to continue to add more value for all of our BeachBum traders. We hope you like this content. Please smash the like button. Help us try to get the YouTube algorithm to show us some love and share our content with other traders around the world. And we really need your help to directly share our content with your fellow traders. Invite your fellow traders to join us in the live chat for our live streams. Join us in our Discord. Again, I'm pretty lousy at the sales and marketing side of things, so I really need help from those who are better at it than I am to continue to grow our BeachBum trading community for the mutual benefit of all of our BeachBum traders. So I hope to see you all back again tomorrow for part 2 of our weekly trading game plan for this trading week, where we'll be selecting our top swing trading stocks to watch, stocks in our bullpen, stocks in our shopping list. We'll also talk about how we can use dividend payers and several option strategies to generate income while we wait for our swing trading stocks to set up. So again, 10 a.m. on Sundays for part 2. And in the meantime, we hope that you all have a great day and hope to see you again tomorrow.